Hello, Maverick traders, and welcome to today's currency recap. It is February 23rd. Wow, well, we had some exciting market action today. Equities managed to rebound after this morning's softer than expected GDP report. The VIX was down on the day, as you would expect, on a day where the stock market performed well. And over in currencies, the Australian dollar and the New Zealand dollar outperformed on a relative basis. Okay, so if we take a look at the S&P 500, it is, in my opinion, more or less do or die time for the market. You can see here on the neckline of this head and shoulders pattern, we are right on it. In fact, we touched down on it today, tested it as valid support and rebounded. If we can rebound again in tomorrow's session and close the week out strong, given how we started the week, then I think we're going on to break to new highs in equities, new highs above the February highs. On the other hand, if we break below the 50-period moving average and below the neckline of this pattern, then I think we can consider this a failed breakout. Going over to the total world stock index, it is the exact same situation here. Don't have too much additional to add. We're balancing right on that neckline, just like we are in the S&P 500. Like I said, pretty much do or die time for stock markets. And over in crypto, back when we were trading in late January, early February, I was pointing out this very sharp bearish divergence in the crypto index. And we did trade down a little bit, but not as deep as I thought we would go. But now, we're getting closer to that target of 27,385. I'm very interested to see how we do here. Again, my opinion is that crypto is going to break lower once again. But if we do take out that target convincingly and the ensuing pullback is orderly, then I'll have to change my tune and start looking for reasons to buy crypto, not sell it. So all that's to say, I do think that the crypto market has the potential to be exciting from the long side, but that it's not the stronger scenario in my mind. I think it's more likely we're going to see further weakness before we see additional, sustained strength. But it's impossible to deny that the performance of crypto in 2023 has been very exciting so far. Okay, so I'm going to give the market a 0 here. We're below the 20, we're above the 50 moving average, and the slope is kind of sideways right now. Not too much more to add there. In terms of news, we don't have too much really going on. Friday, we have some inflationary data in the morning. We'll see how that report comes in. Could potentially be a market mover if we get a big miss or if it's much higher than expected. In terms of currency analysis, it's kind of a strange scenario where equities managed to rebound, but only Ethereum out of the big four cryptos that we track managed to do have a day in the green, so to speak. Bitcoin Cash, Bitcoin, and Litecoin all down on the day. With fiat currencies, there's a pretty clear theme here. The dollar was steady. The Swiss franc and the pound and the euro, the European currencies, were weaker on a relative basis. And the commodity currencies, particularly the Kiwi, followed by the Aussie, outperformed on a relative basis. And the yen held its own as well. We're definitely going to be taking a look at the yen basket in just a moment. So it's kind of interesting, right? We have the yen, which traditionally safe haven currency, outperformed today, but on a relative basis, the New Zealand dollar and the Australian dollar did better. So what is going on there? Well, we'll take a look at the charts in just a moment. But first, some velocity analysis. The yen and the Kiwi are really the ones that right now are showing some signs of stronger positive velocity, whereas I would say the euro and the Swiss franc look a little bit weaker. So we're definitely going to be taking a look at those in just a moment. Okay, so taking a look at some currency analysis, let's kick things off with the dollar here. It's undeniable we are getting this kind of wedge-like shape in the dollar right now. It's not the strongest, most textbook wedge, but it is a little wedge-like nonetheless. So I'm interested to see how well we can trade within this wedge structure in the dollar. If it is a wedge, it means eventually we're going to break out the bottom here and start trending lower. On the other hand, if we can break out this upper trend line and take out my first target of 122 in the dollar basket, that does put the next level of 27 into focus, all right? I mean, that's where we broke down from hard in November 2022. So it'll be very interesting to see how the dollar is going to perform. We're right at prior resistance right now, you know, up against this high here. Excuse me just a moment, up against this high here from last Friday. Okay, so February 17th. So very interesting to see how we perform against that high. If I'm taking a look at my momentum indicators, we are seeing signs of bearish divergence. So at the very least, some kind of technical pullback in the dollar does seem quite likely right now. All right, moving on to the Kiwi. So we found support in this long-standing demand region in the Kiwi dollar. And we've taken out this downtrend line as well. You know, so pretty interesting to see whether or not the Kiwi can sustain its rally. If you are looking for upside targets in the Kiwi, I'd say this region makes a lot of sense. Somewhere between 70.60 to 70.80 or so is a good target range here. So I'm not saying go ahead and buy the Kiwi dollar right now, but just keep an eye on it. And if you see those trend continuation setups to the upside, I think that's a reasonably high probability trade. Now, in terms of the yen, we've broken out of this falling wedge that I called out last Thursday, and we're getting very close to my first target, which is the high from February 14th. And then that would then put the next target into focus, which is the high from Monday, February 13th. All right, so pretty tight target ranges I'm working here, but I think that the best approach to the yen is to take it one leg at a time. And then the Swiss franc, we broke out of this wedge, so I'm looking for lower in the Swiss franc, right? I think the Swiss franc is gonna be relatively weak for a little bit longer still. And then the Australian dollar, although it showed some signs of relative outperformance today, we're below this support trend line. We're below this long-standing support region. So it's possible we get a bit of a relief rally, but you know, I'm interested to see whether the Aussie can break through this support. But my bet would be that we're going to stall out in this resistance region and start trading lower, which would put the low from January 19th into focus. All right, so those are the main currency pairs and main currency baskets that I'm taking a look at right now. So in conclusion, it says dollar pairs in focus, you know, but I definitely would be interested in the dollar if it can maintain its strength. But whether the dollar maintains its strength or pulls back, you know, that doesn't preclude you from playing the dollar on the short side either. But the dollar is something that's definitely in focus for me, depending on how tomorrow's trading goes, if we get some signs of volatility picking up in the dollar again. But apart from the dollar, those other currencies that I mentioned, particularly I like the Swiss franc on the short side if you compare it against another currency that looks relatively strong. I really like that trade being short Swissy right now. I definitely would say continue to trade less, focus on the currencies in play, and focus on quality over quantity. And as always, ensure that you are following your trading plan and maintaining proper position sizing. That's it for me today, traders. Fairly short update. Tomorrow has the potential to be a somewhat muted trading day, just given that there isn't a lot of news packed into the morning, into that early New York trading session. So it'll be interesting to see how the market shakes out after a day like today. So that's it for me, folks. Thank you very much for tuning in, and I will see you next Thursday. Take care, traders. Goodbye.